Everybody, Timo here with BASIN Natural Capital. Been getting some questions about what the frick we're doing here at BASIN. Last few weeks, been months, whatever, been dealing with working on what we call insurance agents with an E. So AI agents, on-chain agents that are smart enough to buy and sell in trade natural capital and ecosystem services. But we're going to get back to the roots on this one right here today. We've abstracted all this stuff out to crypto and blockchain and tokens and AI agents and whatnot. But I think it'd be useful to just kind of ground us back in the core of what we're doing, and kind of frame that in the nature, right, or the real assets or natural assets that we're working with, that the nature that sustains all life. So we're going to do three things here. We're going to do some natural capital examples, the components of valuing natural capital, and then how the frick do you actually invest in natural capital. So natural capital valuation and investment, that's what we're going to cover today. I'm going to try not to get distracted. This is live, so I might get interrupted, might have a phone call, whatnot. But I'm going to try and stay focused, and I have a list of other, we can break this stuff down into other videos later. But first of all, let's just define natural capital. So our official definition that we use at BASIN is that natural capital is the stocks of living and non-living natural phenomena that generate flows of benefits essential to all life. So you could classify that as ecosystem services. You could classify that as biodiversity. You could classify that as natural resources. But we go back to the stocks and the flows of nature, basically, and then the benefits. A lot of people don't like the framing of ecosystem services because ecosystem services serve humans. So we extrapolate that or expand that out to the stocks of living and non-living, so biotic and abiotic, natural phenomena that generate flows of benefits essential to all life. So everything we're doing here is not just human-centric, it's ecocentric, it's for all species. That's part of our core mission. So just wanted to define that. And then what we're going to do here is look at some examples of natural capital valuation and whatnot. So I'm just going to share my screen here. Let's see, share. Okay, let's get off that. And so our core product at BASIN is insurance with an E. So we are insuring the stocks and flows of natural capital. If you can compare it to insurance with an I, right? That's retroactive. That comes in after the fact, after something gets lost, damaged, burnt down, flooded, destroyed. Insurance comes in after the fact and pays or repairs for that, and people pay up front, right, to transfer that risk. They pay for a policy, they transfer the risk and whatnot. So we're kind of doing a play on the insurance industry. And back in the day when the insurance markets first started, there was at the Lloyd's of London, there was what was called the binder, right? When they used to go to Lloyd's coffee shop and write policies to insure the ships and cargo and whatnot that were sailing all over the world, they had a binder, and they used to present slips of the cargo, of the bill of lading or whatever it was called, to insure, right, that cargo, that precious cargo. So the slips were kind of the policies, right, or the potential that would become potential policies. And then the binder is where everything was kept, and so it's like a big book. So we have what we call the natural capital insurance binder, and so our whole model is grounded in real assets, right? Of like we view real assets as a tool to protect, restore, enhance all the benefits nature provides to every species. So what you see here is a bunch of you can call them properties, you can call them natural assets. That's actually what we prefer. You can call them natural capital investments. So you can frame it that way if you want. But these are just properties basically around the US. That's where we're currently focused, that we've evaluated. So these are slips that we put in the binder to evaluate for insurance with an E, to write an insurance policy. And so we can just select one. We'll just do an example. This one's just a really good, simple one that people get, right? So it's wetlands, right? This is next to like a hospital here. There's some kind of treatment plant over here. And this is our standard format that we use for all of the real assets that ground our investment thesis. So combined, these are called natural assets from our context, but from a practical component, they're real estate or real assets. And so we can go over some of these things detailed later, but like natural cap rate, we value the flows of natural capital using ecosystem service valuation. We do that annually. You got the stocks, so that's the underlying real asset value here. And then you have the gap of like, what's the actual gap of like, why should we invest in natural capital? Or, why is this property worth more as wetlands versus adding on to this development here, or putting a housing development in. So our core thesis is around, I was an appraiser, a real estate appraiser for a long time. And so we had what was called the highest and best use of real property. But what we've come up with, what we're pursuing, is the higher and better use. So the highest and best use in real estate appraisal is basically financial feasibility, maximum productivity, maximum economic output, and doesn't take into account what happens to the actual existing land or ecosystem that was there previously. So in all of humans' intelligence, we call, in real estate appraisal world, they call those pieces of land, or this piece of land would be called unimproved. So who are we to decide, right, if it's improved or unimproved? Like, my personal opinion is that this is actually an improvement than this parking lot and whatnot. We need to balance these human uses with the nature uses and whatnot, and we can get into that. But like real estate appraisal, the highest and best use, unimproved, is the lowest use. So vacant land is considered the lowest use, whereas totally maxed out with as many units and as many buildings and as much parking and everything you can cram into it, as much dollars you can put on it, that's the highest and best use. And so our whole approach here, what we're doing is taking what we call the higher and better use. And so we got to weigh those things. We got to weigh the public good benefits that the property or the natural asset provides, but also weigh the anthropocentric or human benefits that the property provides. Like a lot of communities around the country need housing, right? We all need food. We need places to manufacture our goods and store our goods and transport and you name it, all the normal commercial real estate uses or in residential real estate uses. So we have to balance those uses. But this is the normal format we use for valuing and investing in natural capital. And underneath natural capital is a natural asset. So imagine a bunch of polygons or hexagons throughout the world, right? If we go back here, these are all just properties. These are legal property boundaries. And so we're taking the approach that real assets, real property law is a tool for us to restore and protect nature, steward nature and whatnot, and protect all these benefits, restore all these benefits that nature provides for all of us. And so a question I like to ask people is, right, like, where did this come from, right? Like, where did this shirt, or where did this vest, or where did the board, or if you look around your office, like, where did all that come from? When you go drive your car, when you go to the grocery store, and are we separate from nature, or are we part of nature? And so my opinion, right, we are 100% nature, and we're 100% a part of nature. And then so you take that a step further, and like all these goods and services and all the things we depend on, fresh air, water, whatnot, climate regulation, like our society and economy, are those separate from nature, right? And some people might say, well, there's statistics that say that 50% of the economy and society are dependent on nature. It's like, no, it's actually 100% is dependent on nature. So to me, that's why natural capital is important. We are 100% dependent, society and economy, on nature. So this whole framework is built, and you can look at our docs to kind of, so docs.basin.global. We kind of go into the philosophy of like why this is important and whatnot. We look at the intrinsic value in our at the premise of everything we're doing is basically this concept of utilizing instrumental values as relation value. And so like we protect, in order to protect the intrinsic value, we have to use instrumental values temporarily. So instrumental values are dollars, right, or utility value. Intrinsic value is this notion of priceless and infinite value. But like value, right, in our exploration of value that we've done, and we document everything we've done here with the different types of value and where all this stuff came from. But like relational value is subjective, right? It's I'm going to value something different than you're going to value it. That person over there is going to value it. The tree is going to value itself differently than the owl is going to value the tree for itself. So value is subjective. It's relational, right? But in the business world, right, in the finance world, if we're trying to put food on our table, pay for our kids' college, you name it, we have to look at like the real world constraints and the tools we have to do it. So our process takes into account like these real dollar values. And so if we go back to the examples, we can value the annual flows of natural capital in dollars. So this property generates, this isn't income, right? This is value. So it generates 4.5 million of value on the purchase price of the real estate or the project cost of 8.6 million. There's a negative gap there. So this property might be worth, like, might be more better use for human use or like a combo, like mixed use, because that the value there, it shows us a value gap, which is a negative. So basically the real asset cost is higher than the annual flow value. So it's going to cost a lot to conserve or protect or restore that asset. Where if you go back to the wetlands property, for example, this one has a positive gap. So you can buy or invest in this property for $300,000. The annual value of the ecosystem services to society, to the surrounding region is 1.5 million. And people are like, well, where's this number come from? So we'll get into that. But like this format that we use is all the same. We call it the real value of natural capital. So we classify the different ecosystem types. That's where our value comes from. We classify the ecosystem condition, and that affects the value we apply to those ecosystem percentages on the natural asset or the real asset. We're in the US, so we're doing mainly acres, but you can convert it to hectares real easy. We think bioregions and ecoregions are important, so we classify where they are located. We also, basin, right, is our namesake. So we look at the different watersheds that each natural asset is in. And then basin accounts, we can get into that later, but that's part of what we're doing with insurance and how we're going to fund all this stuff. So this breaks it down further. All of our values, our ecosystem service values right here, are based on all the literature. We explored all the literature in ecosystem service world, right, or ecological economics, environmental economics, environmental accounting, whatnot. And you can distill the values of the property down to basically 19 core ecosystem services. And then what we do for our valuation, we actually like food, energy, natural resources are already captured by the market, right? So we put that in land use and resource use down here. So those are energy, natural resources, food. Those are our ecosystem services that would be on this list, but the market already prices those. When you buy a piece of real estate, you basically control, own those, whatnot. But then you have all these other ones that are kind of the public good values here. And all these values that we come up with are based on a database or several databases of anywhere from 2,000 to 5,000 values. So you can actually look at ecosystems around the world. You can look at the land cover. You can look at the condition. And you can use all these different valuation methods to come up with a dollar value of per year, per acre, or per hectare value. So what we've done is reconcile all that and put it into this framework, the real value of natural capital framework. And that shows these values, like recreation value. If people went fishing on this property, or hunting, or kayaking, or you name it, like that's what the value would be to society. So those are basically public good values. And then any kind of real income values would be in, if you're selling timber, if you're selling, if you converted some of this recreation value to hunting pass or fishing passes or whatnot, you would actually move these dollar values down to this land use or resource value section. And then this actually shows the gap. It actually kind of shows the flows, million four of annual flows. That's the gap of like, oh my God, look how much value there is that isn't being accounted for by the real estate market. So this is where we get into the higher and better use of the asset, of the natural asset or real asset. So society, right? If we care about this stuff, if we care about these benefits, look at the return you basically could get. You buy this thing for $300,000, it produces $1.4 million of value. So you have a gap of $1.1 million of public of just value that's just not being captured or protected. So if someone comes in, buys this property, and makes it a housing development, guess what happens to this number, right? You reduce the ecosystem condition from 10 down to 1 or 2. This value all of a sudden becomes, let's say, 100,000 or 200,000, and you're back here. Your relational value gap is nothing, or it's negative. So the natural cap rate, which we'll get into, kind of shows us that relationship of like what it would cost, and then what's the return of value. And this is a play on like commercial and investment real estate. That's what I did for 20 years. Of a normal cap rate in that market is like real income, annual income. But we're taking it a step further and saying, look, there's value there. It's not necessarily income yet, but it could be. And if it was income, it would show up in these categories right here: land use, resource use, whatnot. But so we're just showing you some examples of like, that we looked at the wetlands. And so this property is probably not going to be turned in, right, to housing development or commercial development, but in some states it could. Minnesota and North Dakota used to be all potholes and wetlands. Michigan, they've drained them all. So Florida is kind of the same way. So like depending on the zoning code, this property could easily, if you're looking at it from a development perspective, like, oh, look at that, sweet. We'll just like deal with the flood, the wetland mitigation, and we'll develop it. Put in our housing development right here. But in reality, like there's a lot of wetlands here, so someone's probably not going to do it on this asset, but they could, right, depending on where it is. And so this just kind of shows us like, okay, look at how important. Like think about all the different animals and species, and the clean air, the clean water this property basically provides. And so dollars, like a lot of people don't like putting this stuff in dollars, but like that's a common language. Like you understand it, right? Or I understand it. Of like existence value, right? It's not income, but like people like I know like Victoria Falls in Zambia, right, is valuable to me because I've been there and I know it exists. It has an existence value to me. Or it's like the Grand Canyon is protected and exists. There, so what's the value of you knowing that like this property, and the value, the flows that come off this asset exists. So like there's all these different ones, like risk reduction and resilience, habitat, that's the species that live there, clean air, clean water, those are obvious ones, right? With water abundance, soils, medicinal, genetic, like what species, right, could be here that could be a cure to cancer or a cure to ADHD, or who knows, like there's something that we haven't discovered yet, and maybe not in Florida, but like in the Amazon or in Africa or in Asia and whatnot. So there's all these values that just aren't accounted for in the normal real estate market. So our framework here brings this stuff to light. And then what we like get to with where we're headed with this is insurance, right? So instead of insuring with an I, we insure with an E, that this is protected in permanence for future generations. And so this breaks down the numbers on the insurance. And so I'll just real quick, all of our framework does this. We can do this for any asset, any property, anywhere in the world. It doesn't have to be in the US. It can be anywhere, basically. And then we can do it in hectares. We can do it in yen, or we can do it in euro. We can do it in, whatever. We can do it in ETH. We can do it in Bitcoin. It doesn't matter. Like, we can take the acres, the hectares, the ecosystem condition, and then we can come up with this, our insurance model. And what the insurance model does is basically comes up with a path to protect the natural asset from day one, when we write the policy, and then provide a path to permanent protection, permanent stewardship. So all that stuff we're doing with AI agents and whatnot, and crypto and whatnot, is a way to fund and put all this stuff into action. So that's why I wanted to get back to the core of what we're doing. These natural assets, real assets under the hood. We can compare what the real estate market thinks it's worth or says it's worth, and we can say, well, what we think it's worth, like to the local municipality, to a corporation who's selling beverages. Like, what's the water value, right? What's the nature value to the neighborhood down the road that like has a view corridor over that asset? Like, what you can start to quantify this in a language we all understand, dollars, right? And then you can also break in other indicators and metrics and whatnot around that with like, turbidity and species count, and you can do eDNA, and you can do all this MRV stuff that people are talking about. You can sell eco credits, you can sell biodiversity credits, you can do all this stuff on the asset, but you can't do that, in my opinion, until the asset is actually stewarded or protected. And so our model is like operating at the level like underneath of like, you got to like protect the asset, get it off the chopping block first before you can do all that other stuff on top of it. And so insurance basically is the numbers behind this. So we run I'll start down here. This is our graph that actually shows kind of how it works. Like, real value is that $1.4 million value. And what we do is we run a discount rate on that at just like 2% a year. That's kind of what the natural asset companies we're running on. We're going to run on the stock exchange. That's kind of a normal, like, conservative discount rate. So what you can do is we can say at a point in time today, we think the natural capital value is worth 1.4 million, and you can just project that out 2% a year. So if nothing changes and natural capital is just stewarded, protected, whatnot, that value just keeps going up and probably will go up higher, right, as scarcity sets in with floods and storms and whatnot. So the green line is the real value, that $1.4 million. The policy right here, we run some numbers based on, and this is in log, so it's not showing. If you run it in linear, it shows more closer to that $300,000 number. But like, this is what we can run a scenario where if we had what we call an insurer, it could be sovereign wealth fund, it can be philanthropy, it can be private investor, it can be a conglomerate of people, it can be crypto project, whatever. An insurer comes in and makes this possible. So we, BASIN Natural Capital, are basically like the insurance company. We're like the underwriter. So we come in, we underwrite the property, and then we go find an insurer, or we in some cases will be the insurer ourselves. And we look at all these different numbers. Like, okay, what it would cost today to protect this today? And that's what a land trust does, right? It says, okay, we're going to buy this property, we're going to put it what we call in trust. We're going to protect it today, and that's the cost, right? So it's in this property example, it's $300,000 to do that, plus maybe some closing costs. In our model, you don't have to deal with conservation easements, whatnot, or $25,000 appraisals to satisfy the IRS tax code. So we are making natural capital investable, or land conservation investable, rather than a donation or like a philanthropic type thing. So like, basically people can come in and invest in this, and they're getting this basically value back of the asset, and they're protecting the value in perpetuity. And that's our whole goal, is to protect this stuff in perpetuity. So it gets off the chopping block from day one. And then once it's insured fully, so you can kind of see it here, kind of these time periods end, is that it goes into what we call in trust, which is permanent protection. We'll put a conservation easement on the property, and the actual ownership of the property goes into our foundation's holding company. Basically, the foundation stewards it. Foundation can work with any local organization, land trust, tribe, family, whoever, to steward the land. We can even do land back and give the land back to whoever at the end of this period, these periods here. And these are just scenarios that we run on our model. But our goal is to protect it from day zero, right? And then permanently protect it and put it in trust at the end of the period. And so that's what these options show you. So it shows, like, way to look at it, this is the cost, right? So like highest cost is going to be day zero, but like, okay, like for, where we can go down here, we can look at actually the real numbers, but for like in trust 2030, right, it's $54,000 a year, and you pay it for whoever the insurer is or the payee is, and we can get into those details later, pays into that, and it's protected from day one right here, and it goes in trust 2030. So that's the model. You know what it costs: $54,000 a year to protect $1.4 million worth of value. It's pretty simple. Look at that gap. But okay, $54,000 is a lot of money to protect our wetlands in Florida. So okay, well, let's say we want to insure it by 2040. Same thing. Lower the annual cost, $33,000, or 2050, $28,000. So 2040, right here, permanently protected in trust, permanently protected by 2050 here. So those are the costs. And so whoever the stakeholder is, right, could be someone halfway across the world, it could be someone local, they can decide what that cost is. It can be a group of people crowdfunding it, it can be a crypto project, like I said. But we have to figure out, right, like how you have the real asset cost and how you fund the real asset cost to get it permanently protected. So the quickest, right, not the quickest, but the best, like, normal model is to do it today. Land trust goes out and has to raise $300,000 for this property. And then if they want to do it again, they have to raise another $300,000 or $1 million for another property. And each year they have to do a big fundraising campaign for each property each year, right? But this model basically spreads it out. So they still get all the benefits, right, from day one, or society gets all the benefits that the land trust would be creating anyways. And there's a path for permanent protection and stewardship right here. That's what we do. So that's the model. And then if you wanted to, I don't prefer this model, but if like people say like, well, it's still too expensive and we need to just buy some time, right? Of like, okay, how do we just take it off the market? So our insurer would agree to take it off the market, protect it temporarily for $13,000 a year. So this could be a good option for a lot of groups. So basically, the insurer is the capital provider in our model, and then whoever the payee is, the group who wants to take it off the chopping block or the market or whatnot. This is just a normal like lease model. So basically, as long as $13,000 is paid per year, let's say someone did it for till 2040, that property is not developed. It can be used for stewardship. It can be used for whatever uses are permitted under the insurance agreement. And then if they're like, oh, we finally raised some money, we can actually insure it properly. We can write a 7-year policy at this point in time, probably give some credit for these payments. We'd have to just look at the math. All this just uses time value money, net present value, IRR calculations to do it. And you say, okay, it goes into in trust here. So that's kind of a combo. So like, oh, we can protect this property, for $13,000 a year. You get $1.4 million of value. That's the impact, and this is the discount. So all these properties, all the things are exactly the same. So we can do a separate episode or whatever on that. This just kind of summarizes it in normal words, right? Like protects 1.4 million at a cost of 13,000, has the discount, and right there, full insurance policy can always be added at a later date. So this is just like in natural language, if you want to explain it to your stakeholders, right? Or to your community, say this is what we can do. We can protect Yeah, 1.4 million or 1.45 million of annual natural capital value at a cost of $54,000 per year. It's a 96% discount from day one. And it permanently protects it at the end of the period, which is 2030. So we're 2025 now, so I need to update this 7 years number. But like it shows the impact multiple here. So like in terms of impact investing or dollars, if you're trying to actually make an impact, like look at the dollar value impact of what you could do. So like this, you could wait and like get 108 impact on your dollars while someone's shopping a permanent insurer. So you could actually go tie up under our model, we could tie up 10 properties or 50 properties or 100 properties under this insured model. And then while it buys us time, so like here, that's the cost right here. And while it's buying us time, you go find a proper insurer, local, maybe a company, maybe a government, maybe a high net worth investor, whoever, maybe a crowdfunding campaign. And so for these low costs, we can tie up a bunch of properties, and then you put the insurance policy, the formal policy in place once you line up the insurer. And so our model with insurance is meant to do this ourselves, but this is all meant to be collaborative where other groups can use our model to do it, and we help them do it. And a lot of people say, well, what about the indicators and the species and whatnot? And like, yeah, that's like, it's in the real asset. Like this, like back to the very first point of like instrumental value, intrinsic value, relational value, like what's it worth, right? Like, so relational value, right, is like, what's it worth to you, right? Like is it only worth 13,000? Is it worth $1.5 million? Is it worth infinite? Is it priceless? Like that's that relational value. These are the instrumental values. And then relation is like these things right here. Like maybe it's worth 0 to you, right? So you move on. You want true timber income, or most of these natural capital investments these days are like, we're going to chop down more trees and call it a natural capital regenerative, investment. Or, we're going to take a normal farm, we're going to make it regenerative farming, which is great, but they're going to flip that property in 5 years or 10 years, and it's never going to be protected. It's always going to be on the chopping block every 5 years or every 10 years at the end of the hold period. Whereas our model basically protects it in permanence as long as the insurance policy is completed. But like going back to like what's the value, right? Like those are dollar values, but then you can look at like the metrics and the indicators. And so these are all using standard frameworks that like the UN SEA, or I call it SEA, is going to use. But like it looks at extent, characteristics, condition, and then you add indicators on top of it. But like extent is just the size, right? So 83 acres. We do the different ecosystem types, and then you look at the ecosystem characteristics. We do the ecosystem function groups, IUCN, because we think that's kind of useful. And we're doing desktop reviews right now until there's better satellite imagery, until there's better MRV, or if we're working with a landowner or a group, we can actually make better assessments. Same with ecosystem condition. This one we know is an undisturbed wetlands, and we give it a 10 out of 10. And so we could use biocomplexity here, which we hope to use at some point, would basically be the same thing. So it'd be instead of a 10 score, it'd be a 1 out of 1. So like if it was a 10 out of 10, it'd be 1 out of 1, or biocomplexity might be 0.6. And so it'd be 0.6 would be the biocomplexity score. And we would just multiply that times our dollar values to back into all those numbers. So extent, size, characteristics, what's the ecosystem on it? Condition is like, has it been depleted? Has it been extracted? Has it been burnt down? Is it an untouched ecosystem? So our dollar values take into account all those things: size, land cover, and condition of like what's actually there. And so the beautiful thing about this is it's a point in time. And if you want to regenerate the earth, you can actually come in today and you know what the ecosystem condition is. And then a year from now or 3 years from now, we could come back and do a valuation for you. And you can show all your stakeholders how you increase the ecosystem condition, and therefore the dollar value, the public goods value, to the surrounding community and to your stakeholders. So dollars is just another indicator in our view. So a lot of people like freak out about, oh, don't put money on nature, but like, this coat and this cup, right, is already priced, right? If you look at a lumber truck going down the road or go to Lowe's or Home Depot, all that shit's already priced, right? Or like your food at your grocery store is already priced. So when people like complain about nature being priced, it's like, dude, it's already priced. Like we're just valuing it properly. So, and we're not trying to put all this nature on the balance sheet of the actual dollars of like, we're going to account for every single metric and indicator of species and bug and food and fiber, and we're going to put that $1,499,000 or whatever on the balance sheet. It's like, no, it's a model. So like, we know this stuff is probably priceless. We know this stuff has infinite value depending on who you are. We know it has value like to the neighbors, right? That relational value. We know it has value to upstream and downstream regions and whatnot. So like, we're not going to say that $1,400,000 is a hard value. And if someone wanted to come in and fight us on that value, we'd say, sure, we'll listen. Like, well, maybe $1,400,000 is too high. We'll show you all the numbers, and we can agree that $1,200,000 might be the better value, or 800,000 might be the better value. Or we could say it's priceless. So what do you pay if it's priceless? You don't pay nothing, right? Priceless does not mean zero, right? So like my feeling or my conclusion right now is that what do you pay to protect the infinite, or what do you pay to protect the priceless? Is you pay the cost, right? So cost, price, value. So like, you have infinite priceless value. We know what it costs here, and then what's the price, right? We're going to pay to protect that value. So that's what our model basically does, is like cost, price, value, and then all these indicators, right? We have over 100 indicators we've come up with, or that we've done from literature, and these we quantify them here in our documents. Some point, let's see if I can find. I'm not going to try and find them right now, but basically it uses ecosystem condition typology. It uses biodiversity indicators. It uses carbon indicators. It uses climate indicators, and any stakeholder could say like, what's the most important indicator for our group? We want to really track soil, or we want to use regen network eco credit approach to something, to whatever they're measuring biodiversity or carbon, or sheep hours, whatever it might be, and they can flow the indicator value back up. Ours basically is the real asset, shows the dollar value, and it's a functional, practical model to get this stuff conserved and protected, and to get it in the hands of land stewards. And then the other groups who want to do, monetize that, people call them bio credits, people call them eco credits, people call them natural capital assets, we call them insurance certificates. That can all be done basically on top of the asset. That's the flow and the stocks that we kind of outlined here. But like, the other indicators, or what's honestly, right, like what's really valuable is the other, like the ecosystem function and the ecosystem health. And so ecological indicators are basically a function, right, of ecosystem condition, extent, and type, and characteristics. So our model accounts for that as well, and this really becomes another relational value part of like, what's, is the dollar value important, right? What it costs, what the value is, so that we have all that. And then, we want the water turbidity, or we want the soil carbon to be a certain metric or indicator. So then, sure, like whoever's the project operator can do that. So BASIN is a membership organization. So basically, to participate, you just need to have a account, which is over here at an insurance app. You can see all the different groups and whatnot, what we're doing. So insurance with an E, but you can go like, so these are the stocks and flows of natural capital. Stocks are just the ecosystems, like boreal forests, inland, like that property we just looked at, inland wetlands. There's other shrublands. We value urban open space, because these things have value, right? Like normal commercial real estate development would be cultivated and developed, but these are the stocks of natural capital, and there's 14 of them. And the flows, going back to the 19, these are all the ecosystem services. Energy, food, resistance value, pest and disease control, risk resilience, water abundance. And this is all like, supported based on ecological economics and ecosystem accounting. And you can, at docs.basin.global, you can see in our appendix, like kind of where we came up with, or how we came up with all this stuff. We didn't just pull it out of our butt. So certificates, that's how we're monetizing this to make all this happen and put it, into practice, basically. But I'm going to stop sharing there for a minute. And I don't know if we have any questions. I'm not going to go check all the messaging board right now, but you can DM me on Twitter or LinkedIn. We're sharing to YouTube right now, and we're actually sharing to Facebook also. I don't really do much Facebook, but if you ask questions there, I'd be happy to answer them in another video, or offline, whatever. Call me up, text me. It doesn't matter. But so like with all that, we looked at what natural capital is, right? So stocks and flows of benefits that nature provides, living or non-living, abiotic, biotic, whatnot. We looked at all the different examples, and we could do more examples if you want. We have dozens on the site. I have another 200 properties to look at. And so like, what does this mean, right? Like, how do you actually do something with it? So like, if you're a project looking for funding, or if you're a project looking to value your natural capital, we can provide services around that. We can do the valuation for you, and then you can have all those numbers, all the ecosystem extent, characteristics, whatnot. We'll put a stamp on it, and you can take it to your stakeholders, and you can do what you want with it. So there's a small fee to do that, but if you're a project, we'd be happy to do that for you. Or we can help you issue actually the certificates. You're like, well, we just want to actually start monetizing this stuff. So that's the next thing, is we have insurance certificates. So we have general certificates, which are basically the flows of like place, purpose, people. Like, okay, we want to fund these projects. We want to do price discovery. We want to create liquidity. So we have general specific certificates, and then we have specific certificates, which are actually tied to the real asset, tied to the natural asset, the stocks and flows. And that is actually where people, like an investor, could actually claim the MRV value, the data value around that. Like if you invest in the general certificates, you're just funding basically the whole protocol. You're insuring nature around the world. You're insuring projects like the ones I just showed you. Whereas if you invest in the specific asset certificates, those are individual properties. You're like, well, I'm in San Francisco, and I want to invest in a project in Marin. So we could go like find do a project in Marin for you. Or if you're in Colorado and you want to just do beaver, high mountain wetlands, we can come up with a project for that for you, and we can issue the certificates. We can calculate all those numbers and make it a reality for you. And then to tie all this stuff in a bow, right, is insure our nature-based currency, which is the fungible value of everything we're creating, all these natural assets, all the different people involved, all the different financial mechanisms, and that kind of wraps it all up in a bow. And if you want to go do stuff with currency and have liquidity, and that's we're building that right now. But like if you want to go do decentralized finance or want to convert it to dollars, then you would take insure and go do that. Whereas if you want to actually earn dividends, and not just financial dividends, but ecological dividends, social dividends, cultural dividends, then you would actually invest in the specific certificates. So general certificates is like money. It's like currency. You can go like do all sorts of crazy money stuff. And then specific certificates are basically assets, right? So like we use the natural capital accounting framework of around $1 to value the real asset. And if you want to actually buy shares of the actual real asset, we don't sell the majority of the real asset, because we are protecting the real asset. We are insuring the natural asset. So you could buy minority shares, and you want to hold nature on your balance sheet, then buy those assets. And in some cases, we would be willing to sell the whole real asset, but it's going to cost you. There's going to be a premium, right? Or we're going to put a conservation easement on part of it, or all of it, or some of it. So if you're a big organization, you're like, I don't want to mess with BASIN, and I don't want to mess with other stakeholders. I just want to own the asset, put it on a balance sheet. We're a land trust. BASIN, you did all the work to get it here. You insured it, and we just want to 100% own the whole asset. Sure. If you're an insurance company, sure. Like we will sell you potentially the real asset, depending on who you are and what your intentions are. And it's going to come with some caveats, because we're not just going to let this, go so you can buy it and put a housing development on it. So sorry, you're out of luck. But that's the model of right now of BASIN Natural Capital. Insurance is the model, and how you value and invest in natural capital and nature and all the benefits we rely on. So thanks for tuning in, and I think that's pretty good. So I didn't go as long as I thought I was going to go, which is good. And if you have other things you want to actually questions you want to answer, or what, how do you do governance? Why is crypto involved? Why is blockchain involved? How do dollars fit in here? Who can invest? Why would they invest? Hey, I have a property over here I want to protect. I drive by it every day. Sure, bring it. We'll look at it. We'll figure out a solution. A lot of this stuff is meant to be bespoke and custom, and we'll go from there. So thanks for tuning in. I really appreciate it. And as always, thanks for all the different people who have supported this journey along the way. It wouldn't be possible with all the different groups and organizations and technology and I pester the shit out of people just asking specific questions so we can bring it all back to what we're doing here. So thank you very much for participating, supporting, investing, and whatnot.